So let us begin with this section. So in this section, we are going to deal with two kind of sectors in India. That is for giving out credit to the different kind of people. So first you have the formal sector, like I've earlier told you, it's about banks and cooperatives. Then we have the informal sector, which usually is like friends or money lenders are those people who are lending you the money. Next we have which percentage of people and who are the people who avail the formal kind of banking system or the informal kind of money lending system, right? Then after we see who gets what, we can suggest as to what, who gets what and how to curb such measures that are affecting the people. Then we see self-help groups for the poor. So like I've told you, we will be seeing exactly what self-help groups are, the definition of self-help groups, the different examples under self-help groups and also the advantages of the same. Then we move on to Grameen Bank of Bangladesh, the biggest role model for most of the banking sector in the developing countries is this particular bank, and we will dig deeper as to what exactly this bank does. Then we see the summary of whatever we've covered in the entire chapter. So without wasting any time, let us start off with this section. So there are two kinds of loans that are given out as credit in India. First you have the informal sector loans and then you have the formal sector loans. So among the formal, like I've told you, banks and cooperatives, when they give out loans, so those are called as formal sector loans. Among the informal loans are the money lenders, the traders, the employers, the relatives and the friends. Suppose you are in dearth need of money and you cannot go to your family and ask for that extra money. You can go to your friend or you can go to your neighbors and say, please can I borrow some kind of money from you for such a period? I will return it back to you. So this is a kind of informal loan that is being given out. So let us see what kind of credit is coming more from this formal sector or the informal sector. So I will be briefly discussing a graph with you in order to explain who gets what. So in this graph, you have sources of credit per rupees 1000 of rural households in India in the year 2012. So this talks about the various credit sources which goes to the rural households in India. So at 1% you have landlords. So what does that mean? 1% of that credit is given out by landlords. Let us see the majority as to who is accessing in the rural households. They are taking credit from which areas. So they are accessing maximum amount from money lenders, that is approximately around 33%, right? Then you have cooperative society banks again at 25%, and you have commercial banks at 25%. So these are the largest percentages. You can take a look at the others as well. But please note that among the rural households, money lenders, commercial banks and cooperatives are at the topmost, with money lending leading the whole graph. So basically, which body supervises the basic functioning of all the banks when they are giving out loans? So it is the RBI, that is Reserve Bank of India. For example, like we've seen in the previous class, when the banks are giving out loans, they keep a minimum amount of cash with themselves for the ones that come and ask back for their deposits in emergency situations. So that percentage of cash that has to be kept with the banks themselves rather than giving out as loans is called as cash reserve ratio, and this cash reserve ratio is specified by the RBI for all the banks in the country, right? So what else does the RBI do? It monitors the banks in maintaining some kind of cash balance. And it also sees that the banks are not just making profit, but they're also giving it to the main target groups who who need the kind of cash that they have to use it for their purposes, different kinds of purposes. Like small cultivators need the cash immediately at a certain point, like that is before sowing, so that they can use that to buy different inputs such as fertilizers, pesticides, etc. So they have to get that at that specific time. So, like we have RBI supervising what kind of loans is given out to banks and at what interest rate and etc., there's absolutely no kind of organization which is supervising the credit activities of the informal sectors. Is any organization taking a look at what exactly the money lenders are doing? And also, when you borrow money from your friends, do you think any organization is seeing constantly monitoring as to when the friend is asking back at what interest rate did the friend even give you the loan for, etc.? No, right? There is no organization. So they have the discretion to give at whatever rate they choose, because there is no kind of supervision or no kind of a leader that is looking into what is happening. And like I've told you, the money lenders definitely charge a higher interest rate on loans. And hence, whatever the cost of borrowing or informal loans is very, very high, because the interest that the person who is borrowing has to be paid back very in high amounts. So what exactly does higher cost of borrowing mean? So it means a large part of the earnings of the borrowers are just used to repay that loan. So what does that mean? So suppose a farmer has taken a certain amount from the money lender. So he is using that money lender to grow a certain crop in his field. So whatever money he is getting, whatever profit he is making from that field by selling the crop in the market, that money is not going for his living subsistence, but it is going to just repay the loan. So that is what higher cost of borrowing exactly mean. So sometimes whatever the interest rate of borrowing can mean that the amount to be repaid back to the lender is greater than the income of the borrower. So suppose the income of the borrower is around 1000 rupees, but whatever he has to lend has become 2000 rupees. He has to give the money back as 2000 rupees. So there is a deficit of 1000 rupees and he does not know how to get this amount. So that means he is in a debt for 1000 rupees, and that debt will keep increasing every month. It will keep increasing, and ultimately when the farmer or the one who has borrowed has no kind of income coming in and the debt is still increasing, it is finally called as debt trap. So for these reasons, now that you know what kind of disadvantages the informal sectors have, so for these reasons is why the banks and cooperative societies which have some kind of monitoring as to what kind of interest rate and etc. by the RBI, so these have to step up and these institutions should start to lend more. And also because these institutions give out money for a very less rate of interest, people can use that for their activities as well, and also use a certain money to pay back the loan. So hence, the main conclusion to this is that cheap and affordable credit is crucial for the country's development, social development and economic development. So let us see in the informal and formal credit who gets what share in the form of graphs, right? So this particular graph is going to talk about the importance of formal and informal sources of credit for those people in the urban areas. So in the urban areas, the graph is divided into 4 groups from poor to rich, right? And also in the graph, you can see that 85% of the loans that are taken by the poor households in the urban areas are majority from the informal sources itself. So we will be seeing this in the graph so you can understand it better. Only 10% of the loans are from informal sources, while 90% are from the formal sources. The rich households are availing cheap credit from the formal lenders, whereas the poor ones are fully depending on the informal ones such as money lenders, and hence their cost of borrowing has become very large. So this exactly is the graph, right? So the one in purple is the percent of loans that is taken from the informal sector, and the one in pink is the percent of loans that are taken from the formal sector. So the poor households depend a lot, greater than 80%, on the informal sector lendings, and the formal sector loans are fully taken up. That is 90% of it's taken up by the rich households itself. So do you think there is a kind of parity here? The poor ones have absolutely no income, but their cost of borrowing is very high because they are taking from the informal lenders. So they don't have anything for themselves. All they're doing is that whatever they're earning is going off to prepay that loan. But in the rich households, despite their easy income, despite their last I'm sorry, despite their large income, they are still depending on lower cost of borrowing from the banks. So don't you think it's the opposite scenario? It makes sense if it is opposite, that the poorer ones, if they get a lower rate of interest, they will able to live a better life. Don't you think? So let us see what all this suggests. The formal sector still meets only about half of the total credit needs of the rural people. The remaining half are met through informal sources. Hence, it is very necessary that these formal sector areas, such as banks and cooperatives, increase their lending, particularly in the rural areas. That is, set up more branches in the rural areas so that it can be accessible to every person, so that their dependence ultimately on the informal sources reduces. Next, while formal sector loans need to expand, it is also necessary that everyone receives these loans, right? There should not be any kind of inequality as to who's receiving more, who's receiving less. When it is set up in a certain village, everyone should be able to access it. So like we've seen in the graph, a majority of the formal loans are going out to the richer households, and the poorer ones are getting from the informal sources. Hence, it is very important that formal credit is distributed more equally, so that the poor also get a chance to take credit from those formal areas. Next, let us head on to self-help groups for the poor. So what exactly are self-help groups? Let us see. So now that you've seen, poor households are highly dependent on informal sources of credit, right? Why do you think they're still dependent after so many years? One, because there is not every bank is able to open every branch of theirs in rural areas. So there is absolutely no presence of these banks in the rural areas. And also you should know that whenever you are getting a loan from a bank, there is something called as, you have to keep a kind of collateral, like a property or any kind of land papers, etc. And not every person can afford, not every poor person can afford that kind of collateral. And hence they think, now that we do not have a collateral, the only way we can go is through the informal source. And also informal lenders such as money lenders, they will know the borrowers personally, and hence they will say, these money lenders will say, okay, we do not need any kind of collateral, but we will still give out a loan, but with a higher rate of interest. But the main disadvantages for these money lenders is they charge very high rate of interest, number one. Number two, they have absolutely no record of the kind of transaction, so they can blindside the kind of borrower into cheating him, and ultimately they harass the poor borrowers by taking away their land or taking away their crops and etc. So in the recent past, now that we've seen there is a lot of dependence on money lenders and ultimately the borrowers are getting harassed, there is something new that has come up. It is called as self-help groups in order to provide credit to the rural population. So the main idea rose when you organize the rural poor, especially women, not just women but especially women, into small groups around 30 to 50 people, and you collect their every 30 to 50% savings, right? Usually all these women belong to one neighborhood and they have to meet regularly and they have to save regularly, right? So saving will definitely depend, right, from one person. Not everyone can save the same amount, so it depends on one person to one person. And among that kind of savings that has happened in the group, the members of that group can take loans from the savings that has been made in order to meet their personal needs. And when you take a kind of loan from the group, you have to pay a certain amount of interest. That is what is charged after the group discusses what is the interest of rate. So once the self-help group is very regular in saving and giving out loans to the members and charging an interest rate on that, then it becomes eligible to go to the bank and tell the bank that they need a loan. So once they go to the bank gives them a loan by seeing their capacity to save back, to give back that money to the banks. And the bank says this money is going to employ those people and it is going to give every opportunity for them for their empowerment. Right? So let me read out a small instance. Small loans are provided to the members for releasing mortgaged land, for meeting working capital needs, that is buying seeds, fertilizers, raw materials like bamboo and cloth, for housing materials, for acquiring assets like sewing machine, handlooms. So these are for those that create self-employment. For the different members of the group, banks can give you the money. So what do the group members do? They take decisions regarding how much to save and how much to give out and the rate of interest. And the group also decides as to the kind of purpose the money is being given out to, the kind of amount that has to be given out and when it has to be repaid. Suppose any person ends up not repaying that kind of loan, the entire group takes up this issue and tends to discuss it in a manner where everyone's opinion is accounted for. So because of such strict disciplined manner of saving and giving out loans, banks are willing to lend to self-help groups even though there's absolutely no collateral as such. Hence, self-help groups do not have to face the problem of collateral at all, and hence it is the easiest way where poor people can access money from the bank without collateral. So now let us see the advantages of self-help group. Definitely, because of self-employment, it helps women to become financially self-reliant, which means they do not have to depend on any of the other members of the family for their subsistence, but they can earn their own money and live for themselves. So when the group keeps meeting, then they don't just discuss the financial matters as to savings and loans, but they also discuss about different kinds of issues that are happening in that particular community when it comes to health, education of people, the nutrition, domestic violence. So there is a component of social development that is in this self-help group. Next, let us see Grameen Bank of Bangladesh. So, it is one of the biggest success stories in reaching the poor to meet their credit needs at reasonable rates. So, it started back in 1970 as a very small project, and in 2018 it's had around 9 million members spread over Bangladesh. So, who are the main borrowers in this particular bank? They are the women and those that belong to the poorest section of the society. So, this bank has created a lot of self-employment for these kind of vulnerable people, and the people who have received money from their banks have done so well that they have repaid the kind of loan that they have taken. Now let's sum up the whole chapter as to what we have covered. So we have seen the different modern forms of money and how they were linked with the banking system. So we have seen who are the depositors, who are the creditors, who are the borrowers, who are the lenders. We have seen what exactly is credit. We have seen the positives of credit and negatives of credit, and we have also seen where can we access such credit from, that is the sources of credit. So terms of credit, like I've told you, a very important topic. It can vary from formal lenders and informal lenders. So it is very essential that the total formal sector credit increases so that the dependence on the more expensive informal credit becomes less. This we have seen in the suggestion part of the informal and formal credit section. We've also seen that the poor should get a much greater share of formal loans from banks and cooperative societies. So in order for development to happen, right? So both these steps are important for that, for development to take place.